Yeah, so today is 19th. So you are going to be having unemployment claims during the New York session. I will try to stream the New York session to us for if maybe because the way price has moved and yeah, so 130 unemployment claims and other stuff. So let's check out which of the screen I'm even projecting. Yeah, so currently price has moved a lot. So the Asian session I was awake, went to bed. So it looks like since price was in a downtrend, but my mind never came to the uptrend move. I was looking for a sell, but price. So this is an uptrend. So price just made. This is where we had a shift in trend. This is where we had a shift in trend over here. So price shifted. The trend shifted to an uptrend. It just made higher highs, higher lows, higher highs, higher lows. So at this point, there was a retracement over here. So we need to find, I should have found look for the end of the correction. Okay. So this is where I should have found the end of the correction. So people use Fibonacci and other stuffs, but it's very simple. It's very simple. Who is saying the link is not working? Just come to the Telegram, join. What link are you talking about? Just come to the Telegram and join too. You said the link is not working. What link do you want again, bro? Yeah, so this is where I should have found the end of the correction. My mind just came to this one. So there would have been an entry over here, but the candle never closed with a wick. So it would have been difficult. What time was that? 3:30. Yeah, I wouldn't have even executed. I would have waited for the 15-minute. Nah, I wouldn't have executed this trade. Very choked. This was around 5. Yeah, so it would have been hard. It would have been hard for the buy. So you see, the same thing is what formed over here. This one too, let me see if there would have been an entry. What time was this? 11. This one to the end of the correction. This one to the end of the correction. Let me see if I would have found. Okay, that was what happened yesterday. Okay. So this one too would have been difficult. A lot of rejections. A lot of rejection. So so I don't know whether what happened. The pattern that repeated over here is the same thing over here. The pattern that happened over here is the same thing that happened over here. That's happening. That happened to over here. So the end of the correction. So you see, price. This is the pattern of the market. If it is an uptrend, it moves higher highs, higher lows, higher highs, and higher lows. So we are trying to find the end. Mostly, when price pulls back, if it is let's say, if it's in an uptrend, and we are trying to find the end of the correction. Okay, so this is what a pullback. So what I'm trying to illustrate is what happened over here. Price has been confirmed an uptrend. So the end of the pullback, you get me? The end of the pullback is what I was trying to figure it out, trying to see where I would have entered. So the end of the pullback, okay, how will you know that this correction has ended? How will you know that? So yesterday in the boot camp, we talked about how to identify this thing, the various rejectional levels at when price is, how to identify a valid and invalid level when price has shifted trend and those stuffs. So we talk about when price is pulling back, if the candle pulls back to this side, okay, if the candle pulls back, or if a candle closes below this one, any levels within this level, any level within this zone is invalid. You get it? Any level within. So you are trying to find the end of this corrective move. Okay, is it going to come to this side? Is it going to come to this side before it's what even invalidates the trend? That was what I was talking about yesterday. So that's what I'm trying to figure out. So the same thing yesterday during the New York Stock Exchange session, it happened over here. You see, the same thing also happened. The same pattern happened over here. The end of the correction. You get it? The end of the correction. So this is where you had a shifting trend. So the end of the correction, how will you know the correction has ended? Because there was no support over here. Okay, so let's check out the chart and see if so. Price has broken above the zone, so we have rejection over here. Let's look at the H1. Yeah, let me check out the 30-minute time frame. Yeah, we have some zones to our top, but see, price has been extended too much. Price has been extended too much. So if you execute a buy at this point, it's going to be hard to get a place to place your stop loss. So maybe I will wait for price to come down. Okay, price to pull back, make a significant pullback. Your price has been overextended. So if it happened, maybe it closed like this. It closed like this. That one would be cool. But at this point, price has been overextended too much. So taking it is going to be very hard. Your stop is going to be big. This is a breakout entry. Stop loss is going to be very big. So if it can make a deep pullback and come to this side, like what I've illustrated over here, the buy won't be bad. Other than that, then I'll wait for the New York Stock Exchange. By then, price will pull back. Then I'll get an entry if possible. If possible. If possible. I don't know what's happening. Gold is kind of. I'm looking at the market structure. So you pull up your trend. Okay, price was not aligned with the trend line. I'm trying to figure out how I would have taken the trade at the end of the correction. So mostly when I'm taking a trade, okay, when you see a pattern like this, let me see, has price pulled back? So it's trying to pull back. It should make a significant move, because if price happens, if the candle close like this, where will you place your stop loss? That's the question you need to ask yourself. If you take if you take a buy over here, where to place stop loss will be hard. Okay. At least I have to see, because definitely price will move to this side. over 88 pips. But where to place stop loss is the issue now. At least I have to see price working now, because it has moved a lot. See what happened over here? No wick, it just moved. So I think we have volume in the market, but price has been extended too much, so the breakout is not safe. It has been extended too much. Can we get a wick? Can it wick down? So if price forms something like this, I would have taken the breakout, targeting this. Then maybe if it happens, it will get to the. I'm coming. Price has been overextended. Because if I'm taking a buy over here, if it happens, it flips, it breaks above this one, then my stop loss is going to be around below. This is the logical place. At least if this one went down to this side, then I can use that one as a stop loss. Price is overextended. The 15 minutes looks good. Let me look at the daily. Okay. And the daily too is not bad. Yeah, so each one is not bad. Yeah, not bad. So let me see a significant pullback. 74 pips. Should extend. If price pulls back to this side, okay. If you get something like this, if it pulls back to this side, then maybe I'll consider the buy. if it moves before me, then I'm very sure New York session will give me a better trade setup. Okay, so looking at the H4 time frame, H4 has been extended well. H4 has been given the top wick using the H4 stop loss. 150 pips. 150 pips. I want to see a better pullback. That's what I want to see. Even though H4 is looking good, H4 has made that perfect pullback. But the stop loss is going to be wide. 143 pips. So at a certain point, I just observe and see the outcome. Then I take notes. If the candle closed around this side, I would have executed a buy. But at this point, price is overextended too much. $81 pips. Where to place stop loss? If I executed a buy, where to place a stop loss is going to be very hard for me to get. So at a certain point, just watch. This is not if you see, if you have experience, you know the volumes. You get it. So if this one is like maybe the New York Stock Exchange session, I would have executed. Lending volume is different from New York Stock. So yesterday, the trade I even executed, price was within the side, and I executed a buy. You get it. Even though the zone was choked, but I've traded the New York Stock Exchange session, and I know how gold price mostly reacts. It's very fast and so it's different from lending. So with lending, if you have experience with the various volume times, you know the time you have to be aggressive. You know the times you need to slow down. So lending volume is different from the New York Stock Exchange volume. So New York Stock Exchange volume is very price move very fast. So that's why even yesterday I executed this buy over here. So this one, if it were to be New York Stock Exchange session, because I understood the time over there, that time, I would have entered a buy because I know price is going to buy. This one does no significant pullback. At least if there was a pullback to this side, okay, then price start flipping. But this is just a small pullback. I won't love to put myself in situation. So yesterday like this, if you watch the trade I took, so this was the trade I took yesterday. If you watch yesterday's trade that I took, you see the price really wick down So you see, this is the wick I'm expecting. This is the pullback I'm expecting. Okay, so it's different from what is currently happening. You see, the pullback was significant. You can see, but this one just see. So understand the various times, okay, and how to react during those times. Lending is different. Lending is different. So now price has been overextended. So price has now been overextended. So even if this one pulls back, then my entry is going to be here. So understand the various time with lending from experience. So when I'm trading good during the lending session, I'm very careful because for the past the experience I'm having, lending volume is very tricky. So I'm very careful when I'm trading the lending session. With New York, I know price move fast, so I'm very calm during that time. I need to maybe take some time and explore the Asian session too with gold. But so far, I have experience on lending and New York Stock Exchange session. So I'm very calm and cool during that time. So you have like 45 minutes for lending open. But the 4-hour time frame. Okay, this was the 4-hour time frame. Let me see. 1, 2. So you see the pullback I spoke about. You need to understand the various sessions and when to be aggressive, when to slow down. Lending session. So if you guys can remember for the past past trades that I've been taking during the lending session, I've been very calm and slow very conservative with my moves. Yeah. So this is not New York, this is lending. So price movement with lending is different. Very slow. Price is kind of a lot of tricks. So I'm very conservative during those time. So price really moved. So this was a 6 o'clock candle. Let me see. 5. This was 6. So those are before time. So this breakout during there was a breakout over here. Price broke out at 6:30. There was 6 movements, 6:30, but there was no wick at the bottom, so I wouldn't have faced it. With lending, I'm very, very careful because I understand price movement during that time very well. So unless I see a clear market direction. So lending like this, I mostly don't play with a 15-minute time frame. I most often don't play with a 15-minute time frame. I mostly play when it comes to gold. I use the 30 minutes, unless maybe the 30 and the 15 minutes aligns. But with New York, I'm using 15. New York is different. The volume over there is different. Like, see price movement yesterday. So yesterday, if I held this trade, when I entered this breakout over, if I held it, I would have gotten like 400 pips before price started retracing. 400 pips. So this one too moved during the lending this today. There was no wick, so it would have been hard for me to execute. At least this is what I'm expecting. If it's close like this, if price close like this, I should at least have to see some bottom wick. Means what? Taking a lot of sellers out. Before something like this. Okay, then I'll execute. So this is the experience. With those times I would have rushed to execute, but now I know what I'm looking forward for. So very calm because I understand lending price movement. So the last time I had that was Tuesday to the same thing, and I didn't. Yeah, Tuesday this sell. I said okay. I didn't like the pullback, so I have to see some significant pullback. Price just moved up over here to I understood lending. I said the timing wasn't good. I didn't execute and price moved. And New York session price started pulling back. So understand with lending I'm very careful. I think I have to. So this price movement, and this what do you call it? You see price corrected before it started moving up. So this one, so when the trend shifted to a downtrend, price pulled back. So this is where you are going to find the end of what? The correction. The end of a correction. So mostly with the end of a correction, either the lower time frame shift trend. Okay, maybe if I see something like this. So this is the shift in trend. Price has shifted towards an uptrend. Or maybe if it's a downtrend, we see something like this. This is a shift in trend towards a downtrend before I'll look forward a sell. So this one like this, was there any shift in trend? So if you look at this time frame, how will you know the end of the correction? Or maybe another way to identify the end of a correction is this one. Okay, this is impulsive move to as well. If the candle broke, pulled back, creates a support, it can also be an impulsive move. So with this one like this, price was just making lower lows, lower high, lower high. Price shifted trend towards an uptrend. So the trend is going to shift at this level. This is where we are going to have a shift in trend. So let's move to the 15. Yeah, perfect. So the 15-minute time frame too. This is where we had a shift in trend. So all this one was corrected. Price was just making correction moves. So this is why we had a shift in trend. So it's the same thing that is happening over here. So it's the same thing that happened over here. This is the uptrend move. This is the end of the correction. Finding the end of a correction. So do you people see what I see? You see what happened here? Is the same thing over here. Price just shifted the trend, uptrend. The end of the correction. Let me see. The end of the correction. So this one was clear. With this one, the end of the correction was clear. Okay. This one was clear. So the buy was valid because the H1 time frame is what? An uptrend. Price made this is where we had a shift in trend. Price pulled back over here, created a support. So the buy was valid. Price has already shifted the trend. But you see the rest of them, with the rest of them, price was just in opposite direction of the higher time frame. So this was valid. Where is it? Yeah. Was it this one? Yeah. The markets, the patterns repeat itself. So you need to be very attentive. You need to make sure you are taking notes because it's definitely going to happen. So this is where we had a shift in trend. So this was the 9 o'clock candle. So this is where we had the end of what? The correction. So maybe this is where you can take, where did the buy happen? You look for trade over within this side. You look for trade within this side. The end of the correction. And at the same time, when such setup happens, so I think the price is buying. Just pulled back. So the 30-minute time frame. Let me wait for the 30 to close and see because it's like the 15 is giving some sign of. Can we get a breakout? Let's wait for the candle to close. So it's the same thing over here too. How will you know the end of the correction? It's over here. The opposite is over here. How will you know the end of the correction over here? Because price is a downtrend, pull back over here. How will you know the end of the correction? Are you people taking notes of what I'm doing? Are you paying attention? Because you see, the patterns are the market. See, the market does not do any other thing than to move up, down, move up, down, move up, down, move up, down. So by all means, we have similarities in what? We have similarities in price movement. Okay, we have similarities in price movement. So this one too, how will you know the end of the correction? That's the thing you need to be looking forward for. That was 2. So, but it just made a move over here. So you see what happened during the Asian session. The trade I just spoke about is the same thing that happened over here. The entry. So price just moved. So I have to take note of this thing. Price just moved, pull back over here, created a support, What time was this? Around 2 p.m. So this was a perfect. So let me move to the 15-minute time frame. It was a perfect trade. I'm seeing some. Okay. 2 seconds, 1 second. So price has closed. Oh, the 30-minute time frame close with an additional resistance. So the trade is we need to wait for what? A closure. Let's see, maybe if 8 a.m. you will get what? A breakout above this one. So you see, the thing that you were looking for, you were searching for at the higher time frame is the same thing that happened. So the market does the same thing. It just moved. This is the correction I was talking about, searching the end of the what? Correction. How will you know the corrective phase has ended? How will you know the corrective phase has ended? Price moved, it has corrected. What are you expecting? Continue. So, or until what? The trend shift. Until the trend shift. So how will you know this correction has ended? We need to wait for what? A price breaking above. So this is a resistance. So candle should close above this one. If the candle close above this one, during lending session, I will try a buy. So I'm waiting for the 30-minute candle to close. If the 30-minute candle close above, so let's keep on. You have 30 minutes. So lending open, you will decide on what to do. I'm learning. So it's the same thing over here. How will you know the end of the correction? So you see what happened over here. Price just shifted the trend, pulled back. How will you know the end of the correction? So the red candle is the correction phase. How will you know the end of the correction? That's where. So as I said, for you to know the end of correction, it's either you wait for a shift in trend, okay, at the lower time frame. The lower time frame may be downtrend and it has shifted, or maybe you wait for something like this price in an uptrend. If it creates a support, is the same thing. Okay, then you go in for. So let's see if you found. Do you people see what I see? Do you people see? What time was that? Was it 1 p.m. or 10? So the candle started at 10. So let's move to the H1. So this was 10. Okay, so let's check the trend at H1 time frame. So the trend was what? An uptrend. Price just made higher high, higher low. So there was a shift in trend over here to an uptrend. It's moved down again. So what time was this? 9. So this was the 10 o'clock candle. So this was the move I'm talking about to know if there was a shift in trend. So I think it will be clear at the lower time frame. So I think there will be an entry over here. I'm kind of seeing the same thing happening. Yeah. So this is what happened. So there would have been an entry over here at 11, but I wouldn't have been present during that time. So this one to pulls back over here. Yeah. So pay attention. So same thing over here. If the market is trending, just know the market structure. Just know the market structure and you flow with it. So it's the same thing over here. How to identify the end of a correction. Okay, how to identify the end of a correction. So let's check this out too. This one too. So it mostly happens during the London and New York. So this one too. Let's see where it's going to end and how you would have taken advantage of the end of the correction. Wow, this one was perfect, but there was no wick. This one was straightforward. So sometimes it's going to be straightforward. This one was straightforward. Can't lie. Price is just an uptrend at the H1 time frame. So the trend continuation. It was just straightforward. It was just straightforward. Yeah, this one was just straightforward. Okay. This one was just straightforward. I see. So these are my various scenarios when it comes to with the various market structure. So let's say if the market is in an uptrend. If the market is in an uptrend, okay, if price is already in an uptrend like this. So with this one, like what is happening over here? Price is already in an uptrend. So looking at the H4 time frame, the H4 time frame candle even open with no wick. So the chances that price can come down deep is very high. So looking at what do you call it? Looking at price action like this. So with this one, similar thing is happening over here. This is what you just wait for either a breakout. Okay, so a breakout happened over here. There was a breakout over here. Price just broke out, or maybe a breakout will happen over here, like what you were looking forward for. But price has been overextended and just not giving us what we want. Okay, so similar example over here. We are waiting for price to break out from this zone. Okay, and we have this is how mostly the market moves. If you understand how to read use market structure, so it's either going to be something like this. Okay, so if price is in the impulsive phase, if price is in impulsive phase, how will you take advantage of it? If price is in impulsive phase, how will you take advantage of it? And if price, that means what? The overall trend, the overall trend is what? An uptrend. An uptrend. The overall trend is an uptrend. And you have the corrective phase. So when price is in direction with the impulsive phase, that one is very simple. Like what is happening over here, it's very simple. Just show up at the right time, take a breakout or a pullback. But this is where mostly when price is in a corrective phase, the corrective phase of the market, How do you tackle such market condition? So that's what I was searching for. So when it is in corrective phase, these are the various things you look forward for. It's either you wait for what? A shift in trend. How will you know the end of the correction? The end of the correction. So that's where you apply the concept of what? Market structure. And what? I apply. So price is in an uptrend. So this is when you move to the lower time frame. When you move to the lower time frame, okay. When you move to the lower time frame, price is in what? A downtrend. So the lower time frame is just like a breakdown. Okay, the lower time frame is, so when H4 is giving you something like this, if you move to H1 time frame, it's going to be maybe something like this. It's going to be maybe something like this. It's going to be something like this. And if you move to the 30-minute time frame, it can be something like this. So this is a breakdown of what? A correction. A corrective phase of the market. You're going to see patterns like this. So what I'm trying to say is what? When you move to the lower time frame, something like this means what? The trend is what? A downtrend. Okay. Something like this means the trend is what? A downtrend. So what you can do is to wait for a shift. Okay. Price should shift like this. If it breaks and close, I'll look for what? Then you will know that the correction has ended. You get it? This one, we are trying to search for the end of where this one is going to end. This move is going to end. So when you see something like this, then it means what? The corrective phase, the pullback has ended. It's not going to be extended to where? It's not going to be extended to this side. You get it? It's not going to be extended to this side. Or another way is when price is in a downtrend phase like this, what you can wait for is what? If you get a support with a clean zones to your left, that one too is also a sign. At this point, a new support has been formed, even though the trend hasn't shifted. But this one means what? This is also a corrective phase. Okay. It's also a corrective phase. So that's what I was searching for. So what I was talking about, so you see this one, price just pulled back. So this is what? In a downtrend, but we are trying to find the end of what? This correction. So price just pulled back over here. Then what are you expecting? An impulsive move. So that was what happened over here. So understand market structure very well at the higher time frame. Then you bring the same concept. So the same thing over here, the same thing that is happening over here, maybe at the lower time frame, at the higher time frame, if you see something like this, even though it's a corrective phase. Yesterday I was telling those in the bootcamp that even within a corrective phase of the market, you can still be what? You can still get impulsive phase within the corrective phase. So something like this. So let's say with this one, price is a downtrend. So if it pulls back, this is what? Impulsive phase, impulsive move within a corrective phase. It's a bit technical. This is impulsive move within a corrective phase. So let's say the trend is a downtrend. Sorry, the trend is an uptrend already. Let's see, this is the uptrend phase of the market. This uptrend phase of the market. Okay, and you understand that for a trend should shift direction towards, if it is an uptrend and it is shifting trend to a downtrend, we know the rules. Okay, so if you want to know, you should have joined the training. You know the rules. So at this point, this one is just a corrective phase because the impulsive phase hasn't been fully corrected, and this one just made highs. So what it means is what? This is the end of what? The impulsive phase. This is the what? This is the beginning. This is the end. So you're expecting price to correct the whole of this one. So you were thinking, as this one pulled back, you were thinking it's going to make higher high, but it just made high. So this one is an impulsive move within a corrective phase. You can take advantage of this sell. You can take advantage of this sell. It is what? An impulsive move within a corrective phase. If it happens like this, you can take a sell. So the same concept. So you see how experience has what saved me from taking a buy. Experience is the best teacher. First, I would have rushed. So if you are trading and you are losing money, just learn and what, keep on doing it. Okay, keep on doing it. With time, experience is going to teach you. You are going to be very sensitive to your mistakes. You are not going to be repeating them again. So keep on showing up, even losses. But one thing is what, a lot of people are not tracking their progress. They are not having any journal. That is why it takes you very long and you still don't see progress. You need to track your performance. What are you doing wrong? But if you keep on doing the same thing and you are not tracking your progress, that is when the mistakes happen. You keep on doing the same thing over and over because you are not having any track records. You don't have anything. Yeah, so as I was saying, this is also what an impulsive phase you can take. So I have a similar example over here about what I was talking about. So this is what I'm talking about. So if you watch this market, you notice that the trend is what? A downtrend. Price pulled back. Okay, expecting a continuation. It just made what? It just made, instead of lower low, it just made low. So now it has created a new support over here. This bullish candle. So you can still be taking a buy. As I said, this is how the pattern looks like. Okay, you are expecting a lower low, but it happened. It just made what? Low, and what? Created a support. So that means you can take what? This impulsive move. When you see a support like this, you can still take what? A buy of this corrective phase. Okay, you can still take a buy of this corrective phase. So within this area, I'll be looking for what? A buy. So that's what I was talking about. So another example, yeah. So this is another example. So you see, this one was in a downtrend. Price was just making lower lows, lower high, lower low, lower high. So what am I expecting? You're expecting a lower low, but what happened? Price just made low. So if it happened by this one, the candle just moved very fast. So there was no what. But if it happened, price created very small candle with the hot a support over here. This is where you would have been looking for what? You would have been looking for a buy, okay, to take advantage of this small move. By this one, price moved fast. You get it? Price moved very fast. So every decision that I take it from what? The higher time frame. Then I will channel the same idea. So this one is straightforward. Just price pulled back, created a support. This is straightforward. Yeah. So similar. This is a similar example. So price just pulled back, this thing. We were expecting. I'm expecting a higher high, but I just made low and pulled back over here. Okay. So within this pullback, it's an impulsive move within this corrective phase. So this one I can look for what a sell within this one. So the end of the correction I was talking about, this is an example of the end of the correction. How will I know the end of this correction? Let me see if I would have gotten an entry over here. How will I know the end of the correction? So there was a support over here. So the various entry models I showed you, either a shift in trend or what, a corrective, an impulsive move within a corrective phase. So this is straightforward. Price is already what, making complex structure, higher high, just made highs, lows, highs, lows. So it's still an uptrend. So this is what, straightforward move. So the candle is going to close at 9. So let me see. So all price is closing. Price just close within, what do you call it? Price just close within, below the zone. So it would have been hard to take a trade over here, unless maybe the candle breaks above. And first, you have to also check the time of the day. So you just made straight move up. The candle, okay. So this one, if it happens, we get a support, then it can also be a good buy. A support, like a bullish candle breaking. Okay. So this candle broke above, but the 15 is not clean. The entry is the most difficult part. You know the direction, but price will just be playing with your emotions. So I think since you are in volume time, let me check. Okay. So that means this level has been invalidated. So this will be a nice buy with volume time. So place your stop loss over here. Okay. So price came, stopped me out over here before it went in a direction. So let me check if there was any support or resistance at the H1 time frame. There was no support or resistance. So I was supposed to get entry at this site, but I ended up getting it within this area. Yeah. I hope you've learned a lot of things today. What's happening on gold? So it's still so what's happening? What you are currently seeing? What can happen is what during the New York session you can get a pullback, then price will start. So after lending session, lending open, I don't see any massive move. I will just call it the session and come back again during the New York session. Okay, so I'm expecting a pullback. By then the by then the H4 candle would have closed too as well. Okay, so maybe this one can just maybe pull back, then we get a nice pullback entry. So do you have any news events? Okay, 1:30 we are going to be having. So maybe after the news event, or maybe around 12 p.m. too. They can mostly 12 p.m. price mostly gives an opportunity or trade. So maybe during that time. Lending session this February hasn't been good. That's why I'm very careful. Okay, I'm very conservative when it comes to my decision making during lending session. For lending, it's kind of a lot of fake out. So the whole of this week, it's only one trade. That was yesterday. Yesterday's trade. So understand market structure. Okay. Understand market structure. So those in the bootcamp, I've taught you market structure. You need to go through it, learn it over and over and over and over again. Watch practice, because I really took my time to teach that concept. So if it's an uptrend, price made higher high, high low, higher high. So this one is what? Impulsive phase. If it pulls back, this one becomes a corrective phase or correction. Pullback, retracement is the same thing. So corrective phase. This is how the market mostly moves. Impulsive phase. Impulsive phase simply means when it is in the direction of what? The overall trend. So impulsive phase. So you have corrective phase. Correction. You have impulsive phase. Okay. So every phase of the market, how will you tackle it? Every phase of the market, how do you tackle it, or how will you tackle it? So this is how I mostly and so this is what we call this one simple. We call this one, so this is a premium distance session. I'm giving it to you for free. This is simple structure, simple uptrend structure. This simple uptrend structure. And we have, so the opposite will be what? A downtrend. So, and we have complex uptrend structure. Complex uptrend structure. So with complex uptrend structure, we mostly see what? We mostly see higher highs, higher lows, higher high. Price does something like this. Okay. So all this phase is what? Correction. So the reason it's a correction with that one, I can't tell you. Okay, because you are not part of the training. So this is what a correction phase. Someone will say, why is it not an uptrend? This is a corrective phase of the market. So what I'm trying to say is what? Within this corrective phase, we have impulse moves within this correction phase. Okay, so this is what an impulse move. Impulse move within the correction. So this is an impulsive move within the correction. And this is also an impulsive move within the word correction. But if you are talking about this correction or this corrective phase of the market, this is an impulsive phase. Okay, if price creates a resistance, you can take it. So that's what you need to understand. So first of all, before you start executing, move to your directional time frame and have a look at what is happening. This is what is going to give you a clue on who is in control of the market. Because we come to the market, the reason why I was looking for a buy is because looking at the overall direction, buyers were in control of the market. So that's why I was looking for a buy, not a sell. Okay. So you need to understand that. You need to understand that. So that's correcting phase of the market. So this is how mostly the market moves. So if you are very good at reading the market, you understand that price move the same. Okay. So it's in a downtrend, lower low, lower high, lows, highs, or higher high, or lower high rather. Price just made low. So you see, this is what it was supposed to make lower high. So this is the move I was talking about. Even though this is what a correction, because the overall direction is what an uptrend. Even though this is what a correction, but this side is what there was an impulsive phase over here. The moment the candle gave you a support, there was an impulsive phase, because this is what a complex structure that is happening. Instead of price to keep on making lower low, price making lower low, it just made low. Okay, it just, instead of lower low, it just made low, higher high, lower high, low. Okay, so the same thing that happened over here, this impulsive move, impulsive move within a correction phase of the market is the same thing that is happening over here. Okay, but this one just moved, it didn't move like massive like that, it just made some small extension and just retrace. So this is complex. The whole of this phase is correction. It is correcting this impulsive move. It's a bit technical, but yeah. So at this point, as you are seeing the pullback, okay. So lending has opened. So at this point, this now the various zones or the valid zones. We have a zone over here which is valid. We have another zone over here which is valid. Okay. So the H4 time frame is still an option. So you see the H4 time frame open with no wick. So that's why I was even very careful with the move. So price has pulled back to create a wick. So at this point, it's very simple. If you get a support, then you just take a buy. Simple. Simple, 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 simple. Simple. If price creates a support, just look for a buy. But I would prefer the 30 minutes, because you have to know the time, every time, and how you are going to react. Sometimes you just, if it were to be the New York session, I would have moved to the 15-minute time frame and look for a support. But lending, I would love to look for it at the 30-minute time frame because of the volume differs. So if you see something like this, if it happens price is going to close around this side, give you that support, then you react. Okay, then you react. Very simple. The moves repeat itself. Okay. Yeah, so if price it happens, price give a support, then I'm going for a buy. Any question? Is anyone having a question? If you have a question, you can bring it on board. Yeah, so this is what I'm expecting. on gold so far. Hello. Yes, sir. Yeah, so looking at the daily time frame, the candle has closed strong bullish. Okay, so it's the same price action, it's the same pattern that I was talking about that has happened over here. So moving to the H4. H4 is an uptrend. So just higher highs, higher lows, higher highs. With a pullback, then you take the continuation. Moving to the H1 time frame. So you are just waiting for a support, then you take a buy. All the time frames are pointing up. So first you were looking for a breakout, but now you are looking for what? A pullback. Okay, so I've given you what you have to be looking forward for. So if price creates a support, you are still in volume time, 8:39. You do see, sometimes volume comes into the market. It's not bad. So if 30-minute time frame give you this thing, I think it's not bad to take. But from 9:30 to 10, the market starts slowing down for the New York session. So these are the things you can be looking forward for. All right. So is anyone having a question so far? I hope you've learned a lot of things today. Is anyone having a question? Any questions so far? So if you are doing your analysis, first of all, watch the how the pattern is what behaving at the higher time frame. Okay. You need to watch how the pattern is behaving at the high time frame. Then you make a decision on that. So the end of a correction over here, the end of a correction over here. So you need to ask yourself, if you see a pattern like this, you need to ask yourself, where is the correction? Is the correction going to end over here? Where is the correction going to end? For the impulsive phase to continue, because you understand that this is what? Just a correction. Okay. But this one, it would have been very difficult. This correction phase, it would have been very difficult because the trend is already what? A downtrend. It is different from when it is what? Maybe opposite of a downtrend. It's an uptrend. This one, the trend is already what? Lower lows, lower high, lower low. So I won't even be expecting what? A buy. The only time I will be expecting a buy or be looking for a buy is when price has broken above this one. Then it is confirmed that the candle has now created a support. Then I will be looking forward to take a buy. Let me see if I will get a buy within this side. So this is where I'll be looking for a buy. What time does this candle close? 11, 12, 1, 2, 3, 4. That will be a long time. 11, 12, 1, 2, 3. So the candle, okay. So you see how this is how the candle is looking like. So I would love to wait for, because this is a new resistance. So if it happen, the candle give a support, or sometimes then, or let's consider the 15-minute time frame. Yeah. So this one looks good for a buy. Yeah, I think this move, I remember this move. I really, wow. So price stopped me out and later came in the direction. What time was this? Around 3:30. Yeah, so at least I would have gotten something over here. Yeah, before it moved in the direction. Around 3:45. Let me check out the 30-minute time frame. The H1 time frame. The H4. Yeah. So there was a correction, there was a resistance over here. So if you guys remember yesterday, I told you that, so this is what you are going to learn today: how to identify valid and invalid support and resistances within a complex structure. So if price is making higher highs like this and higher lows, if price does something like this, I told you to look at your immediate left. So this one is valid because this level is still valid. If price hasn't closed below this one, this level is still valid. Okay, if you see something like this level is still valid because this is a corrective phase and you're expecting it to what? Correct the whole of this impulsive move of the market. This is a corrective phase. So still this side is valid until it's closed below. You get it? So it's the same thing that is happening over here. Price just pulled back, made a correction phase. So this level, okay, before it closed above, before this one, it was still valid. So you see the candle close exactly on the level. Yeah, so this is how it was looking like. So I should have waited. So you see price, so you see how I figured out why the trade didn't go in my favor. And what did I realize now? I just noticed that I was trading on where? On a resistance level. Okay, I was trading on a resistance at the H4 time frame resistance level because this is valid. So this level is not valid. This is not valid because the candle has already broken and closed above, so it's no more valid. But this is valid. So the mistake I did on that trade, even though everything is pointing up, but there was a resistance over here. So that's why price got rejected on that level. So if you lose a trade, figure it out. So at this point, if there was no zone at the left, so now this one has been invalidated now. So this will be our new support, and this one will be the new resistance. So if the timing is bad, if not the timing, this one on. If it were to be New York Stock Exchange session, I'll just take an impulsive move because I understand the volume during that time. So you see how price is struggling to. Price got rejected on that zone. several times. So the zones are very important. All right. I hope I'm not talking to myself. Yeah, so the 15-minute time frame. Okay, so the 15-minute time frame is closing. Should I wait for the 30-minute time frame? So the 15-minute time frame has closed. I mostly prefer the 30 minutes rather. So it has now. This is what I was talking about. So let's move it back. So exactly what I was talking about. So this is what I was talking about. But I'll prefer the 30-minute time frame. I prefer the 30-minute time frame. So I'll wait for the 30-minute time frame rather. Because I know and I understand the lending volume, how tricky it can be. I love taking my decisions on the 30 minutes rather. So you see, the market does not move based on the technical analysis alone. It moves based on what the volatility in the market. So for every volatility, you need to understand what. For every volatility, you need to understand. For every time of the day, you need to understand how the volume works during that time. You get it. So sometimes you are not going to, you are not wrong, but because of what the time, you are not wrong, but because of the time. So all these things you need to journal. You need to take records of it. So 15-minute time frame, you see the fake out. It's mostly fakes out. Fake out. I think I'm prolonging it. So you don't have volume in the market. So all the volume started at 6:30. Okay, just moved. I didn't want to execute at a 15-minute time frame, so I'll not call it a misread. I didn't want to execute at a 15-minute time frame, so that's fine. I will not call it a miss move. Can you guys hear me? Hello? Can you people hear me? Can you hear me?
Yeah, we can hear you, sir.
Okay. So what's the takeaway for today's session is what? Know the time of the day. Okay. Know the time. Sometimes some people will enter a trade and they will suffer. The trade will just frustrate them and other stuff because the time of the day is very bad. Okay, so understand the time of the day and save your account. So this one, if it were to be New York session, no double thought about it. I'll just execute it by straightforward because I know the New York session comes with a lot of volume. I would have executed it quick. And I trust and believe in New York's. So you see, the same thing that I did over here is what's happened now. It's the same thing that happened now. It's the same thing. Just 19 pips. So now the 30 minutes has been extended. So the same thing. Price creating a support. Price created a support. Just move. I'm mostly confident in during the lending session. If I get trade at this time, if I get a 9 setup, 6 to 8 a.m., 8 to maybe latest by 8:30. These are the times that I mostly love executing. AM GMT, so you convert it to your local time. Not bad. Okay, guys, I just want to hop off. The analysis, everything played out, but I don't like the volume. So, is anyone having a question? Is anyone having a question? So price has moved so far.
Hello.
Hello.
Good morning, coach.
Good morning, madam.
Anyway, today is my first time of joining your live class. But I have a question. It's like you don't trade with the SMS, the smart money concept. Or I realize you said you focus on the market structure, demand and supply, if I'm correct. Please, can you hear me? Please, has the coach ended the session? I can't hear him again. Those online. Hello.
We are all waiting.
Oh, okay.
Maybe he's having network issues.
Maybe.